Okay, this is Icy, Chris, Sean, Jesus, and Abby, and today we're going to talk about the importance of the revenue cycle. Okay, to understand the revenue cycle, you're going to have to understand the definition of the revenue cycle, which is a recurring set of business activities and related information, processing operations associated with providing goods and services to customers, and collecting cash and payment for those sales. We're going to talk about later an ERP, and ERP is Enterprise Resource Planning, and it's a software system that helps organizations automate and manage core business processes for optimal performance. So this is just like the middleman that ties things together. The goal of the revenue cycle is to identify areas of friction within an organization, aka what we call threats, and to find ways to solve them or keep them at bay, aka what we call controls. So there are four revenue cycle activities. As you can see, there's an example flowchart on the right, and from 1 to 4, it goes sales order entries, shipping, billing, and cash collections. The revenue cycle activities are each divided into more in-depth steps. These are also what we call mini cycles. So Cron wrote, companies may periodically analyze their revenue to evaluate their profit generating activities. This cycle includes all activities that lead to the generation and collection of income. Analyzing the activities can help you find ways to improve your collection procedures and increase cash flow. This is the incorporation of the controls that we mentioned. Compare your revenue cycle with your knowledge of competitors' processes to find more possible areas for improvement. So that's what we're going to compare Walmart and Target to and see how they're similar and different.
So basically the sales order entry is how a company will digest a purchase order, and it all starts with receiving the order. When a customer submits their order after adding all of their available products to their cart, and once that process is started and the billing information is taken, it's translated into a sales order form, and this can be done by EDI. And this sales form basically just summarizes all their information. It includes their billing and shipping address, the product number of the product, the quantity, unit price, the description to avoid mistakes or anything, and the sum of all these purchases. It can also include like the payment options. Certain companies will offer all of these and some more. They usually include cash, card, financing. Some have mail-in payment. And this is done mainly for accuracy purposes and organization purposes. And they'll usually take some information from the customer, like a credit card number or a cash receipt is taken. Now, for also part of this process is checking and approving customer credit. Some of these companies issue credit cards to encourage their customers to buy on credit. And so the sales team has to go in and check the credit before approving their credit cards. And the system also checks an updated record before approving a purchase to make sure that that customer isn't heavily in debt and hasn't reached their credit limit that is set by the company. And basically, this is just an up-to-date report, and it shows the outstanding balance and how long they've had that balance for.
So also within the credit cards, a lot of companies are beginning to do it because they realize how much they can make off these cards.
So the next step, step 3, is checking inventory availability. So it basically just relies on checking if the product is available. It also checks where they have it located, because some companies have different warehouses, or they might have it stored away in a different location or a different part of the warehouse. And if this item is not available and it shows up on the system that it's not available, they'll put it on back order, which basically means shipping it to the customer once it's restocked. And this is all done. This whole process of locating the product and seeing if you have it in stock is done to give an estimation of the delivery date. And once this is all gathered, they give out picking tickets, which is basically, it instructs the workers what products are needed and where to place them. And the merchandise is accounted for, and inventory is reduced, or if it's a return, it's added to the inventory. And this is done through asset tracking, and this is done by multiple things. It can be by RFID or it can be done by SKU barcodes. Now with sales order, we do run into certain problems. We have threats and control for each of these. And the threats can be like incorrect processing of order information. And this can be on the customer side or on the supplier side. It can be like incorrect form of payment. A customer might mistake one address for another, might put in the wrong address, or they might buy the wrong model of the product, or they mistakenly added 2 more products than they actually needed. The quantity could be wrong. And a simple way of getting through this is using the electronic data integration interchange, which basically converts the customer's order into a compatible format for the system processing. So basically the system goes through, it picks up the information that it needs and places it into a sales form, which basically allows it to be understood. And another thing that they do is a confirmation email every time you buy something from Nike, Walmart, or whatever it is. They'll send you a confirmation email, just, restating your information, letting you know what products you bought, giving you an estimation date, and letting you know if you have any difficulties getting your package, or, if you want to change anything, there is a customer service number you can call or an email you can email, stuff like that. And the second problem that occurs with sales order is tracking inventory. And this is basically the only problem you can run into is having insufficient inventory, basically telling a customer that you do have something and later on you don't have it on hand. And this is done with the RFIDs and the SKU barcodes, and they just help keep a better track of inventory and let you know what you have on hand.
So Target has a credit card called the Red Card, and I'm going to give an example of if you purchase an order with your Red Card. So you go on the website or the app and you purchase the item that you're looking for. The total amount is authorized to your card. Pick ticket is created and order confirmation is sent to the customer. The items are scanned and taken out of inventory. A third-party contractor is required to deliver the merchandise. Shipping invoices is created. The merchandise is given to the third party to deliver to the customer. The product is delivered to the customer. Accounts receivable is recorded, and payment is collected from the customer. All the Target's products come with barcodes that allow them to scan the products during different stages of selling the merchandise. Target's inventory system allows it to scan products once it's received. The product is also scanned when it's stored on the sales floor or in back stock, and again scanned when being taken out of inventory when sold or shipped to the customer. In 2015, Target began to attach RFID smart labels on price tags and merchandise in key categories such as women's, baby, and kids, and apparel. The barcodes and RFID tags keep Target employees from picking the wrong items or the wrong quantity being presented when you go on the app or if you're on a website. Walmart utilizes third-party shippers to deliver their inventory. They utilize UPS and FedEx to deliver ordered products. Walmart also has delivery now through the Walmart app. They now utilize contracted drivers to deliver groceries to merchandise to your home. Some threats have increased with that as potential contractors can steal the merchandise and deliver the merchandise to the wrong home. Go back. Also, some more threats. Self-checkout allows more threats to occur. This also employs stealing inventory. Inventory theft. Your employees working the shipping and external inventory theft. Target combats these threats with inventory by having a team of merchandise counters. They count every week in each department to make sure inventory is correct. There's also the asset protection team, which is basically loss prevention. They try to combat internal and external theft. And Target also has yearly inventory in their store to account for the shrink in their stores. And this is an example of a pick ticket and also order confirmation.
Now, because Target and Walmart are working with third-party distributors whenever they're delivering their products, they don't necessarily have full control over the transportation of the product from whichever center to the customer. So they're essentially at the mercy of their vendors. So the having a working relationship with credible vendors is very important to the entire process because their distributors play such an important role in their supply chain that can easily affect their brand if not taken seriously enough. And then the third stage of the revenue cycle is going to be the billing cycle, and it essentially consists of two steps. The first one is the invoice, which we are summarizing all of the sales order entry information and all of the shipping activities and putting that into one singular sales invoice, and basically puts it all into one thing, so it's very easy to track and take a look at. And then the next stage is going to be updating the accounts receivable, which is essentially all the money that's owed to us and future incoming funds that we have. And we're utilizing information from the invoice to either debit the customer accounts or credit them once ever we've received the payments. And this is the example of invoice that you would probably typically see that would have all the information there for just summarized so that you're able to make things run as efficiently as possible.
So we actually discussed earlier why this is important, because if you were just doing one order, you can do everything that you need to do by yourself and make sure everything happens. But whenever you multiply that by 1 million each day, you have to have things like this in place to make things run efficiently.
Yeah, exactly. And some of the things that you typically would run into as far as the billing goes, some of the things would be failure to bill customers. So like you just forget to do it, or some cases they just don't do it. Like, for example, let's say that your friend orders something and you're probably going to try to help your friend out with a discount, or you just give them away for free. And in order to prevent stuff like that, that's where we one of the controls is segregating the billing and the shipping department. So let's say you have a friend in the shipping department and you work in the billing department. It prevents those two departments being able to essentially work together and work against the company in a sense. And that's also where the picking tickets come into play and the sales orders, because it gives us full control over, we know exactly how many orders are coming in, and it makes sure that every ticket is being accounted for. Another thing that potentially comes up are billing errors. So let's say, price is wrong, or someone's undercharged or overcharged, and it ends up, if they're overcharged, we end up hurting the possibility of a customer actually coming back. If we undercharge, now that's lost revenue that we're possibly never going to be getting back. In order to prevent that, our system has a master file that has all of the pricing for each product, and we can add restrictions to it. So only certain employees are able to go in and make changes. So like probably not even your sales floor manager, is probably going to be more so at the corporate level. So that way you're not worrying about your master file being corrupted, because once the master file is corrupted, that essentially it puts the company at a really bad spot, because now every single order, every transaction is based off of that master file, and then you have to go in and clean up that all of that, and then it creates a whole lot of chaos for the whole process. Another one of the errors that you can run into the billing cycle are errors in maintaining the customer's account. So let's say someone paid off some of their debits that they had with Target or Walmart, and it's not deducted properly. So now they paid off their full amount, but it's still showing in our account, and now we're still, we're pestering them, asking them for those funds. Or in another scenario, we reduce someone's liability to us, and they haven't even paid off their debts. And then one of the last few ones is inaccurate or invalid credit memos. So kind of like the example I talked about earlier, where if you have a friend working in another department, this prevents any type of wrongdoing happening within the department.
And so the last cycle in the revenue cycle is cash collections. And in this cycle, the company is given payment from customers for the goods or services that were provided for, both Walmart and Target. And since cash is an extremely important part of the revenue cycle, there are many controls that should be set in place in order to prevent any threats that are dealt with cash. And so some threats that we deal with cash collections for both Target and Walmart is theft of cash from employees at both of these places. And this can happen in many different points. So one could be at the time of the sale. So whenever the employee is, ringing up whatever they're buying and they're given cash, that could be a part where there's a threat of theft of cash. Another part is after that time of sale, it could be brought to the back office to be dealt with from the accountant, who will deal with that cash and bring it to depositing in the bank. So with dealing with cash in the back, that employee bringing that back to the accountant, that could be a time, or whenever a certain employee goes to the bank to deposit the cash, that could also be a threat for theft of cash.
There's also, there was also somebody like within the last year who has been like convicted of stealing over $65,000 from a specific Walmart store. So it's happening, and it happens even more than like $65,000.
Right. And then another extremely important threat that we need to be aware of is cash flow issues. It is super important for both Walmart and Target to be timely and organized when dealing with cash flow issues. The quicker that these companies can receive a customer's payment, process it, and deposit the cash, leaves less time for there to be a threat of theft. And so some controls that we can do for cash collection is segregation of duties, as was stated in billing. It's really important that, there are certain tasks for certain employees. So that way, if there is, a theft of cash, they can go back and keep a record of who was doing what at that time. And another thing is having more than one employee present while dealing with cash. So let's say at the point in sale, if there were theft of cash, there may be less of a risk for that if there's more than one person present during that. Another one is cash registers are really important to ensure that there's a track of the cash. Depositing cash on a daily basis rather than a weekly or monthly basis will help keep a record of that too. And then for cash flow issues, a cash flow budget allows companies to keep a detailed record of the cash that is received. And it also helps these companies understand any future faults so they can properly prepare for them.
Okay, so the general threats to the revenue cycle, like much as we have mentioned, those are threats specifically to Walmart and Target, but these just go a little bit more in depth. Self-checkout is a very prevalent form of theft that's going on right now, especially since a lot of companies are implementing self-checkout. As she just talked about, employees stealing cash, issues with inventory due to scanning problems, theft from external factors due to shipping and other things, sending the wrong products, and issues with third-party shippers, because at the end of the day, these big companies are liable for the shippers that they are hiring. So the controls in place to ensure revenue is you have to process integrity controls and authentication controls. You are putting in strong access controls to limit certain liabilities. You encrypt sensitive data in storage that only certain people are allowed to. This helps with information not being disclosed. There's has to be also backup options like procedures in case certain things go down. This is the ERP systems that we mentioned. And also measuring revenue margin solves poor performance just outside of threats, but it's also a control to say, hey, let's make sure that we're actually making money. Let's make sure that we're making revenue. And that's it.